Nifty futures, the discount is widening. Even the Bank Nifty futures, the discount is widening. So, I mean, at some point, my sense is today, by the end of the second half, you will have some kind of verdict on whether this discount starts to narrow down or whether these shorts, start to get some kind of an entry in the market. But for now, Sonia, it's very clear that the market is reacting to the global situation, but between yesterday's low and now, again the markets moved in line with what the global cues have presented us. So let's see, and we are very close to that zone of 10,410, which is where the market will see a lot of resistance. So purely from the risk reward point of view, perhaps not the best time to take a long. But Ashwani, your thoughts on the market opening? It's in line with what the pre-open indicated.
See, the sense I am getting is that the shorts are getting into a bigger and bigger hole with each passing day, and sooner or later, there will be some throwing in of the towel. So, not a great futures market, but I would think that taking options positions for higher strikes like 10,500 will keep you safe, and you will participate as and when that anticipated short covering starts.
Okay, by the way, PVR is the other stock which we should have discussed. That's actually starting in the red. Disney Plus Hotstar has announced a lineup of almost 10 movies on OTT platform, and of course theaters will be closed in the foreseeable future. So that's one stock which is still seeing a bit of a downtick at the start. Mitesh, your thoughts on the market opening and any interesting trade that you may have spotted?
Quite a decent opening, I think, much in line with what the SGX was suggesting. I think that might just, if it sustains for next 1.5 2 hours, I think the intraday indicators might just start turning positive. So then we'll look at 10,550. But in the meanwhile, what you can look at is possibly some stocks and cement names come up early in the screen, as well as Asian Paints. I think these are the stocks I'll.
Okay, Mitesh, anyway, we almost got everything you said and the phone line snapped. We'll touch base with Mitesh later on in the morning. Ashwini, I got your point that the shorts are getting into a hole and will have to cover. But what will falsify that theory? If the market goes to what? 10,200? What will be the Lakshman Rekha?
Well, basically, yesterday's low, if you start to break 10,200 in a fairly decisive manner, then that view does not play out. So your risk is fairly low, whereas the upside could be fairly high if things play out according to plan.
All right, gentlemen, thanks a lot for taking us through the market opening. It's been a decent opening, but again, opening right at that zone of congestion. Keep an eye on the mid caps because advanced decline is about 3:1 for starters. Tata Steel is now moving big, 5% higher on Tata Steel, and it's taken other steel stocks along with it, the likes of JSPL. Gautam Trivedi is now joining us in this discussion to make sense of the recent market moves. He is, of course, co-founder and managing partner of Nepean Capital. Gautam, good morning. Thanks a lot for joining us. How have you read into this recent market volatility? We had a one-way rally from the March lows, 7,500 to almost 10,500. A lot of mid caps participating. How are you seeing the current market setup?
I think the way to see the market really is that the US market and the Indian market, and I specifically talk about the US market, we're joined at the hip, whether we like it or not. So as a result of which, you've seen the markets really tangoing together since probably early March. And specifically, as you said yourself, both markets actually hit the bottom on the very same day on the 23rd of March and have gone up since about 36, 37%. So I think this is obviously a function of liquidity, and liquidity is going to continue to be the dominant factor guiding the markets forward, both for the US as well as India. You're looking at already $3 trillion the Fed, the Trump administration has already spent. The Fed's balance sheet has now crossed $7 trillion, and there's another $3 trillion already passed by the House of Representatives. So there is going to be money, even more money potentially coming into markets. And as we all know, emerging markets and India in particular are driven by flows and unfortunately, or fortunately, not by fundamentals. Having said that, I still think holding liquidity aside for a minute, both the US and the Indian equity markets are completely out of sync with fundamentals.
Okay. Well, that was what I was coming to, Gautam. I wanted your views on a couple of fundamental shifts that are happening. First, what would your approach be to this definition of Atmanirbhar, which is keep the Chinese out? Is that going to be a longer term positive because Indian industry will have less competition?
Well, let me divide that into two different groups. Things which are Chinese, as in you can read it's made in China, versus let's say a pharmaceutical ingredient, key ingredient, which is not made in India, will at some point be made in India because you can't put up a factory in 6 weeks and start manufacturing it necessarily. But stuff like that, I think, will still be needed to be imported, even possibly at a higher import duty, which the consumers will have to bear. But things which are in your face, like, for example, a Chinese automobile, a Chinese TV set, those, I think, you will probably see a more immediate impact, assuming the escalation does not subside. And I hope it does, but assuming that doesn't subside, and of course, then Indians will clearly be wanting to stay away from Chinese products. So I think you have to separate the two, and whatever's in your face will immediately get impacted, including mobile phones, I would assume.
Okay, got that. Gautam, hi, good morning. The stock of the moment right now, in fact, the sector of the moment right now is metals, led by Tata Steel. Tata Steel is up almost 4%. Hindalco, JSW Steel are also in the green. Gautam, your thoughts here, because for Tata Steel, the European business profitability is much better than what the street expected. Do you think that this is a story that could be structural, and would you advise buying into some of these large cap metal names?
I think you've seen a lot of asset reflation happen over the past about 2 months, especially with respect to crude oil. And of course, metals have followed soon. But don't forget, at the same time, you're also seeing gold hitting new highs. So it's a dichotomy that you actually have metals and specifically gold, which is a metal where people actually buy when they're uncertain about the near-term future. So we haven't seen this before. So I'm not sure how long this metals rally will necessarily last. But it clearly tells you that certain things, for example, China's industrial print that came in yesterday was actually very encouraging, as a result of which all of the Asian markets are up today. But I'm not sure how long this is going to last. So while I'm not an expert on metals, but I haven't seen gold and other metals moving together necessarily.
Okay, by the way, Glenmark's correcting more. It's been correcting ever since that one big rally, and even post good numbers it's actually corrected. So that's clearly a stock which is under a bit of pressure. Any pharma names that you've added to portfolio, Gautam, in this rally? We've had a big rally in the pharma space.
Yeah, the only stock that we've added has been JB Chemicals in the past few months, and it's done very well for us. Of course, there are other reasons why it's doing well. Talks about, again, I'm repeating what's in the media, talks about a potential takeover by private equity funds. So that's done very well for us. But for the most part, we've actually been really confused as to why is it that every pharmaceutical stock has rallied 50 to 70% from the bottom, especially when only some of them are actually engaged in potentially building a virus or making any medication for COVID-19. So for example, you have the Serum Institute, which seems to be really ahead of the pack, but it's unlisted. So not so sure why every pharmaceutical company necessarily needs to benefit from this. So we've actually otherwise stayed away for the most part.
Okay. Gautam, how are you going to tackle stock purchases and stock choices